Welcome to the Weekly Livestock Market Update. I'm Brownfield anchor reporter Megan Grebner. With us is University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, as we take a look, there's plenty to talk about this week as it relates to livestock and reports, but let's start and wrap up what happened this week on the markets.
Yeah, so if we start on the cattle side of the equation this week, live cattle down about $2.50 this week. Really another week of pretty light trade in terms of fed cattle marketings. On the feeder cattle side, we were steady to 3 higher this week. If we look at the current futures contracts, those August contracts, live cattle futures up $4.25, so a lot of strength in the futures side of the equation, while feeder cattle futures for August were up $2.75 for the week. On the beef side of the equation, choice box beef price was down $2.20 this week. We saw some weakness in the loin side that I think really contributed to what we saw occur in that choice box beef price. On the hog side of the equation, late in the day, getting cash barrel and gilt prices were down $3, a little more than $3 for the week there. August lean hog futures were also down $3.75 this week. That puts that August contract down over $9 over the last 2 weeks. So we know the direction those markets have been, and I think a lot of folks continue to bet that hog prices are headed lower as we continue to see a lot of shorts in those futures contracts. The the pork cutout value was down $1.40 this week. We saw some pretty significant moves here on Friday with belly prices down hard on Friday. Ham started the day down hard but came back a lot. So those really contributed to what was going on in terms of that pork cutout value. I just keep reminding us that ham prices are 30% below where they were a year ago at this time, and I think that's really been troubling for that pork cutout value.
How much of this decline, because we've seen a significant decline in cash hogs as well as the future side of things, is coming from the uncertainty with all of this trade discussion and the tariffs and the incredibly large hog supply that we have?
Yeah, so I think you got to look at all three of those. I think the tariff increases that we've seen of late were certainly kind of what tipped us over the edge. But a lot of folks all of a sudden, I believe, have woken up to the fact that we've got a lot of hogs coming to the market here in the latter part of 2018 and actually going on into 2019. Because you see a lot more stories about just and you see it, the mountain of pork coming to the marketplace. Those stories, that's not new really, but it's been picking up a lot recently in the popular press that I see out there. So I think the combination of a lot of tariff discussion and the harmful effects in terms of exports, coupled with now these larger pork supplies, have really weighed on these markets the last 14 days or so.
We're going to talk about supplies as we get into the livestock slaughter report that came out this week. And really, we're continuing to see more beef and more pork. And that seems like it's going to be a theme that we're going to talk about a lot.
Yeah, I sometimes worry. I often tell producers when I have outlook meetings with them I worry about the structure, the change structure of the hog and cattle industries. And I say that because I think in very high price periods, we can get expansion to occur really quickly, especially in the hog side. Yet when we have not so profitable periods, we have a hard time reducing production. And unfortunately, I think that has to come to get us some higher prices in front of us. It's not maybe a fun environment to live in when all of a sudden you think about what will be prices that'll drag for a while as supplies stay large. But if you look at what we got out of livestock slaughter, we now have the first 6 months of 2018 in the books. Beef production 3.8% higher than a year ago. Pork production 3.4% higher than a year ago. All those are really expected and probably not a lot of new news there. We did see increased weights generally across the board. I kind of average across both species and go up about 0.7% in terms of slaughter weights. If I look at some of the individual slaughter categories, beef cow slaughter up 11% for the first 6 months of this year. I think we can talk about weather playing part of that role, but also lower cattle prices playing some role as well.
Does the drought and weather conditions come into play not only just with the livestock slaughter report, but as we look at on feed and the cattle inventory reports as well?
Yeah, absolutely. We got cattle inventory report today, and that report really came in close to pre-report expectations, up 1% in terms of cattle and calf inventory. For me, the only maybe surprise was that heifers for beef cow replacement stood at 97.9%. I thought that might be a little lower than where we saw out of USDA's report today. But weather's playing a big role, and I'll remind folks, and this question keeps coming up as well. What should I do right now? Producers in Missouri, a lot of them face very dry weather. They'll say, should I go ahead and liquidate? Should I try to hold on? And I will say we talked very early this year about weather effects, and all we're seeing is that dryness hurting more parts of the country over time. One could tell a story. You get a couple years down the road and we get some reductions in beef cow inventory, prices could look better. So you have to maybe look at that silver lining of if the drought's not affecting you so badly, perhaps in a couple of years we'll talk about higher cattle prices. However, I wouldn't want to suggest we'll repeat 2014 anytime soon, because the drought of 2012 was certainly a lot worse than where we sit today in terms of weather.
So I'm going to jump ahead and steal a little bit of your thunder as we talk about the cattle on feed report, because one of the things that you and I talked about ahead of time was the percentage of heifers on feed. So we look at that number. We talk about the heifers for beef cow replacement being less than anticipated, and an increase in beef cow slaughter to take that from the livestock slaughter. Putting those three numbers together, does one maybe think that we're not going to see expansion in the beef cow herd anymore?
Yeah, I think that we have enough information now to be more comfortable in saying we'll at least be flat in terms of beef cow inventory January 1st of 2019. That 36.8% of cattle on feed July 1 being heifers is very near kind of that longer term average. It's 36.9 was the average we had 2002 to 2014. So I think we've set enough in motion in the first half of the year here to probably stay flat. Where we go from here is still important. I think a lot of folks are going to bank on some fall growth, and that's a long ways from being in the bank in terms of getting some good forage growth here late in the fall. And if we don't have that, a lot of folks are going to struggle, I think, especially given what I hear some of these local hay prices are like. So we could be down, January 1 of 2019. I kind of go maybe level at best, and perhaps we start to really turn down much sooner than we thought, even if folks want to keep some of those cows around. Feeding them has certainly been difficult in many parts of the country.
Let's talk about the rest of that cattle on feed report. Any real surprises in the numbers that came out this afternoon?
No real surprises. We saw a few more placements. Many had become aware of larger runs occurring in a lot of auction markets around the country, and so there were a lot of folks expecting placements to be higher, up 1.3% relative to a year ago on placements. Been seeing more calves coming from Mexico in particular that I think also entered the feed yard. On feed numbers of July 1, 104.3% of a year ago. That's the largest number for July 1 since this series started in the mid-90s. So, we've got pretty big runs of cattle on feed in yards still yet today.
Let's talk a little bit. Monthly trade data actually came out last week, correct, while I was out. Any big surprises that we take a look of exports of U.S. beef and pork?
Yeah, so if you look at that monthly trade data through, so we got May numbers out. The first thing that I'll say is when you look at the beef side of this equation, exports of beef in all forms in May was nearly 20% above a year ago levels. So despite we've had all this tariff discussion, most of the trade that we've seen in terms of historical numbers has still been good. However, we'll wait and see once these tariffs and we start to report some of the data that we get. whether that continues. Now, on the pork side, May was fairly flat relative to a year ago. I remind folks, thank goodness South Korea jumped a lot in terms of trade in May. They were up 40% relative to a year ago. So otherwise, I think we would have been down in terms of U.S. pork exports. If you look at some of the weekly trade data that we've been seeing of late, it does show a worrisome trend of lower weekly pork exports. So a little different story, I think, going on in that trade data, beef versus pork.
And we talked about this before, but does that uncertainty and the unknown about what could happen as it relates to imports of U.S. pork in other countries, China specifically, as well as some others, as to what happens with what's going on market-wise?
Yes, and I will say, first of all, I always go, we want to look south here to begin with. So what's going on with Mexico? I hear on again, off again. We're getting closer to a NAFTA agreement. We're not getting closer to one. The fact that ham prices are down 30%, I think, has a lot to do with what's been happening with our trading partner to the south. That's one issue that we need to work on, and has added to a lot of volatility in the market. It's hard to read. Are we going to get a NAFTA agreement? Are we not going to get one? Are we going to do it bilateral with Mexico? Not be so worried about what's going on with Canada. That in particular is important as we look at that ham side. China is equally important. I remind us a lot of variety meats there that are having, I think, trouble finding a home at prices anywhere close to where we were before those tariffs started to escalate. And so we want to take those a little bit at a time. But that the markets are going to stay really volatile until we get a better handle on what can the Chinese do in terms of looking for other supplies of those products. What's Mexico going to do if we continue to have tariffs where they sit today? Those things become clearer with time, but still pretty uncertain, just given we haven't really experienced this for a number of years. And we're just really entering the weeks where this, I think, really starts to bite a lot more.
Looking ahead to next week, cold storage comes out on Monday. What are we watching for in that report?
Yeah, so we're going to want to see where belly stocks are at, for example, and I worry that we're going to start showing some building of freezer supplies of red meat generally, and that's not going to be the news we need, given we've had plenty of things that have kept markets probably under pressure, and so I will wait to see on Monday just how big of freezers do we need out there.
Scott, we will catch up with you next Friday to get the latest in the markets and to take a closer look at that cold storage report.
Sounds great, Megan.
To have our weekly livestock market update delivered to your email box every Saturday, visit our website, brownfieldagnews.com. You can click subscribe. You can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner on Brownfield.